Hi, it's Andy Hoffman again, Media Director for Miles Franklin Precious Metals. Today I'm excited to have Harvey Organ as my guest. In my view, Harvey and Ted Butler are the two preeminent experts in the world on the COMEX. And given this year's massive COMEX gold inventory drain, putting its entire existence in jeopardy, I could think of no better person to have on the year's last audio blog. Harvey publishes a daily gold and silver trading report at harveyorgan.blogspot.com and is well known for, along with Bill Murphy and the late great Adrian Douglas, giving testimony at the now legendary 2010 CFTC hearings in which, among other things, Andrew Maguire's bombshell silver manipulation testimony was released to the world. Harvey, it's an honor to have you on the Miles Franklin audio blog. How are you doing?
I'm doing fine, and a Merry Christmas to all your listeners.
Yes, I have to, again, I have to thank you for doing this on Christmas Day, actually. It's very important and we really appreciate it.
Thank
Um,
you.
Now, as always, we'll start just by reviewing the week's top news stories, and then we'll move on to broader topics that are of Harvey's specific interest. Now, let's see. Obviously, as the PPT hyperinflates the Dow to maximize Wall Street bonuses, the economic data continues to demonstrate why the Fed, at best, chose to maintain accommodative monetary policy last week. And yet, due to the stupidity that is the hype surrounding the supposed tapering, they are losing control of the bond market. With the benchmark 10-year Treasury yield on the cusp of breaking above the key round number of 3%, the entire global economy could be blown out of the water, as sadly it has become irreversibly addicted to ultra-low interest rates. Regarding the supposed U.S. economic recovery, new mortgage applications plunged 6% this week to a new 13-year low. Meanwhile, the holiday retail season is easily the worst since the 2008 financial crisis, as last week alone, retail traffic was down an astounding 21% year over year, and same-store sales more than 3%. Moreover, with personal income barely budging, consumer spending was up sharply, thus taking the savings rate to multi-year lows as people take out more and more debt to pay the bills. And trust me, that trend won't change anytime soon, as with both beef and chicken prices achieving all-time highs this week and Obamacare ramping up next year, 1.4 million people are about to lose their unemployment benefits. This will be great for the published unemployment rate, but not the explosion in entitlement spending that is turning America into a dependency nation. Hence, you could see why the Fed decided to get rid of the silly 6.5% unemployment rate threshold for ending its zero interest rate policy, in essence, extending it to infinity. And by the way, I urge all listeners to read my Friday article titled Proof of the Tapering Mirage, in which I demonstrate how rising interest rates resulting directly from the Fed's suicidal taper talk caused the Fed to dramatically increase covert QE over the past 8 months to the tune of roughly 130 billion per month compared to the published level of 85 billion per month. Harvey, what is your assessment of the U.S. economy, and for that matter, the global economy, and what do you anticipate might occur in 2014?
Well, the U.S. economy certainly doesn't look too good. You have to look at the rise in the 10-year bond, U.S. bond, and it just on Friday night it hit 2.97, and that is a critical level because basically all prices, like home prices and everything, is geared to that. Anything over 3%, and you're going to have a derivative mess. The banks will have for sure a problem. A lot of these things are underwritten around 3, so they got to try to keep it. The tapering, as you mentioned in your beginning, your talk, the reason for the tapering, the idea for the Fed to do the tapering was to try to it was the shadow banking industry that Main Street needed. So if they tapered a bit, it would kind of allow more bonds to be used by the shadow banking industry, which is needed. And of course, if you didn't taper, then all of a sudden the Fed, Bernanke, would continually buy 0.3% per week. And by the end of 2014, you would probably see 50% of the entire equivalent 10-year Treasury bought. And that takes away from Main Street. And that's why he was worried. That's why he really wanted to taper. He knew the economy of the United States, the housing crisis was hitting him pretty hard. You got 48 million people on food stamps. Obamacare is coming. It's going to be costly, but good. So the U.S. economy certainly it does not look very good at all. And as you mentioned, they're certainly printing not only the 85 billion, but they're certainly a lot of side door purchases of bonds by the United States.
Yeah, every
And once you tell that,
yeah.
there's nobody there to buy the bonds. So who? Japan's in the same problem. Europe's in the same problem. So there's nobody there to buy the bonds, which means you're printing your own money.
Yeah, everything these days is side door. And as you mentioned, the J.P. Morgan whale trade was at lower rates in there. Of course, is a derivatives mess, and they're playing a game of chicken here as Bernanke leaves office, because if rates cannot be held down, then they're going to just have to increase the level of QE, because the whole world is hinging on ultra low interest rates. But let's move on to the main event. Harvey's analysis of what is occurring on the COMEX, where registered inventories have fallen to all-time lows due to, in my view, surging physical demand and fears of default stemming from this year's announcement that German gold will not be returned for another 7 years. For that matter, it was learned this week that in the years since Germany demanded 700 tons to be repatriated from the Fed and the Bank of France, it's only received 37 tons thus far, or just about 5% of the total. Now, Harvey, let's start with the most pressing question on listeners' minds. As of Monday night, and it's now Wednesday, COMEX registered gold inventories, that is what's available for delivery, were down to a measly 463,000 ounces, worth a measly $550 million. The December contract closes in just 6 days, and according to my calculations, if a major source of supply isn't secured by J.P. Morgan, Scotia, or HSBC by then, we could end the year at no more than 150,000 ounces. Do you agree with these numbers? And based on your experience, is there any precedent for such situation? Moreover, do you believe the COMEX can continue to function as the world's leading price discovery mechanism with so little available inventory?
Okay, that's a loaded question, and I'll give you what I've been stating to everybody. And my line is the first place where physical gold leaves will be England. London is the physical market. COMEX is a paper market. So what I basically said on Friday, I'm saying that we should concentrate on watching how the GLD levels go down in London and watch the COMEX levels. However, what goes on at COMEX is a smidgen to what is in London. And of course, there's been quite a few guys. One Bloomberg financial analyst actually went into the vaults in London and saw a zero there, saw very little gold there. And that alarms me, because I've been basically saying that once London is out, then China will switch over to here to the COMEX and just take whatever it is, and that's the end. And China will get its gold first. There's no question. China is the guy that has the power, the club over the United States' head, and it basically says, if you don't give me your gold, I'll cash all my 1.3 trillion treasuries on you. So that's what I'm seeing, and I'm seeing a real hodgepodge of events on the COMEX, which are strange, like J.P. Morgan putting a deposit exactly 10 tons of which is 10,000 kilobars. If there is, I doubt that. And correct, Kurt Ferguson correctly states that generally in the COMEX, the purity is finest is 995, whereas in Europe it's 999. Why would anybody go to put a deposit for delivery of 995 and to pay a loss? And it would be considerable in that kind. So you're looking at those figures and you say, my God, and that was J.P. Morgan. And back to Scotia also had one on Thursday. But it looks to me that paper, GLD paper is coming into the mix here on the deliveries somewhat. Okay, so that alarms me. It can't, it's illegal. Okay, I'm just telling you. But when I start seeing deposits of 000, I get very alarmed. And I actually have been speaking with the CFTC officials on this, and they said they have an answer for me, but they can't tell me for confidentiality. And I screamed at this, because I sense danger when they're allowed to use GLD paper for a settlement, knowing they hand in a redemption from England. And the redemption gives a bar code, a bar number, a weight, and everything, and they can use that. And that's fine. But when I start seeing it's quite possible them using without that, I get kind of worried that they're kind of mixing in some paper, and because their inventories are declining. And as you stated, we got 14.40 tons on Friday night. And I really think you got to look at the top three, okay? Because the fourth one was actually, there's five. There's Manfra, little Manfra's got 0.22 at a time. It's like nothing. So let's forget about them. And then you got Brinks, and Brinks issued very little this month. So, and then you got the other three, and the three are, of course, J.P. Morgan, HSBC, and Scotia. So since J.P. Morgan has been receiving 97% of all issuance, and that should be alarming just in concentration alone. How can you allow somebody to every day, 97% of all issuance goes to JP Morgan this in December? So it is easy now for me to spot, because I'm going to be looking. Of course, I want to see that gold go into JP Morgan. Okay, I wanted to see it leave a bit of Brinks, of course, the major guys, HSBC, which is the custodian for the gold, and of course Scotia. And both of those two, if you exclude Morgan, because Morgan is not, I don't think it issued any. If I'm not mistaken, maybe maybe one or two, very tiny amount. So I took the 2.7 tons away from them, meaning I've got only 6.6 tons of gold standing there, of which I got 9 tons left to be issued upon. And that's what I've been seeing, and I'm pretty accurate on that. So what I've done is I've gone to the dealer and see whether he has issued, has been delivered upon, and I can tell. And there's been 4, okay, and that's come to approximately 11 tons. It's in my report how many, and the total standing for this month is 20.8 tons, which would leave a little over 9 tons left to go. And I'm pretty sure that the bottom 2 guys would be issuing upon them would be Scotia and HSBC.
Right, and
that's where the funds are going to begin. Now, the other you're going to ask me is, will they do it? I think they're going to come through in December. They'll probably borrow from somewhere to get it, but come February, it's going to be, they won't have it. See, right. What you're going to see is the dealer inventory at the end of December go down to 0. You'll probably see it very, very little gold. Okay. And of course, we have January, which is a non-delivery month for both silver and gold. But February is a huge month. As a matter of fact, the highest delivery of this year was February, right, which was over 40 tons in February of 2015.
So what it comes down to is, we are going to end December with very, very little registered gold, with a very, very big month coming up in February, and on top of that, a lot of suspicious activity with the inventories coming in exact numbers, which leads you to believe some of it is paper. And of course, the fact that J.P. Morgan is front and center in the middle of everything, which should be a giant warning bell. And that leads me to my second question, which I'm dying to get the answer to. Now, for some time, I've read that J.P. Morgan is taking a major long position in the futures market in gold, but I cannot reconcile a lot of the things that I read. For instance, according to Ted Butler, the bank participation reports indicate J.P. Morgan may be as long as 60 or 80,000 gold futures contracts, and that's 6 or 8 million ounces worth, up to $10 billion. But when you look at the COT reports, the quote commercials still have a short position, even if it's a small short position. So I'm trying to understand this. If you can give a little clarity.
Well, actually, I think for the last 4 weeks, I put always a little disclaimer. If you guys believe this, here's the data. In other words, I don't believe the data.
Okay.
Okay, it's a little far-fetched. But then the question is, can it exist? Okay, can the two exist? And the answer is yes. You can have J.P. Morgan can be massively long in gold paper, and of course be also short in London, supplying the physical over to the Chinese. Okay, in other words, they're on, and they call these on the forwards over there in England. So we do not have the data from London. So we basically have one hand tied behind our back. But the question is it possible? Well, let's put it this way: if it is that true that J.P. Morgan is that long on the paper side, and the hedge funds, which are massively short, and J.P. Morgan then goes over to the hedge funds and say, "Deliver me my gold." Mainly because maybe China wants that gold because they are the fiduciary. Then all hell breaks loose because the hedge funds certainly don't have the gold. Okay, they don't produce it, they don't have it, and the game is over. You have a collapse.
So do you believe that J.P. Morgan is long, as Ted Butler believes, in the COMEX side at least?
Oh yes.
Okay.
Oh yeah, that's a given. That I think is there. I'm not too sure what J.P. Morgan is doing over in England.
So how can it be then? Answer me this: how can it be that they could be that long, and yet the commercials, these are two different reports, still show a short position, albeit, as I said, this is as small a short position as they've had. Presumably, J.P. Morgan is one of the bigger commercials.
Yes, but you put all the other guys together, and
Okay.
they slightly go to the negative side, slightly.
Okay, got it.
Okay, so in other words, remember you got HSBC is the guardian of the GLD,
Right?
And they're the largest ones in that. So, and then Scotia is getting up there. So probably there's been a few guys probably thinking of Scotia being a patsy here.
Yeah, I see.
And down the golden path is going to get
so HSBC is a major player in the commercials on the COMEX, and of course they happen to be the custodian of GLD. Just like when you look at silver, which I'm going to ask you about in a second, J.P. Morgan's the custodian in silver, and they happen to be also very short on the COMEX.
Well, yes, you got to look at
Okay.
A lot of people when they take a look at the GLD, what happened 2 days ago. I mean, it blew my mind.
Why don't you go into it? Go into it because everyone's not sure what happened.
Well, okay. Well, the GLD has been declining.
The inventories, yes.
Rapidly.
Mm-hmm.
And then on, I believe it was Monday or today's Wednesday, maybe Friday.
Okay.
It went up by 6 tons. Went up 6 tons, 6.4 tons. First rise in probably 4 months. I've never seen a rise like that. I go, oh, this is interesting. Okay.
Mm-hmm.
Then I said, well, in order for that is a paper. That is a paper edition. Nobody can find 6.4 tons immediately in that day, load it and put it into English vaults and that. Forget it. It's paper. Okay. Then the next day it goes down 9. Where it is today. So it went to 805 point where it finished. That's real. When that gold goes down like that, that was a banker who cashed in his shares and drew that gold out and that gold went to Shanghai. We're balancing. Actually, the amount of gold going into Shanghai is greater than the global production on an annual basis, which that should be alarming to anybody in itself.
Yeah, the Shanghai Gold Exchange alone has delivered more gold than the U.S. supposedly owns in the last couple of years.
Yeah, I'll give you one last week. 20 tons of gold was deposited in the SGE, Shanghai Gold Exchange. Mm-hmm. That is a physical exchange. You cannot have, and gold must leave that depository, that exchange. Okay, you take it and leave. Okay, and generally all that gold goes to probably official reserves in China. It goes for jewelry, whatever it is. But the world produces approximately 6.7 tons per day. Okay?
Mm-hmm.
And what I do is always, always, always take away gold produced from China and gold produced from Russia, because not 1 ounce ever gets out of those two nations. Every
Right.
gold is produced is used for official reserves or for their people.
Mm-hmm.
So when you start seeing the difference between 20 and 6, you know that the demand is certainly much higher than what is supplied. And of course, we have other nations. You got India now, and of course, you have the great smuggling lines now coming to fruition. And you got, who are the big importers of Korea?
Turkey. How about Turkey? Is a huge
Turkey.
importer.
Well, Turkey is
Yeah. Yeah.
Turkey is your center for the Arab nations, and we just saw on yesterday, Saudi Arabia has decided
Mm-hmm.
to put its reserves not in cash or dollars, but in gold. Okay, so Saudi Arabia would be Turkey. Okay, so the Turks, when they would go to Turkey, to Istanbul, in their centers and do their trades, and then gold would go. And Dubai is a very major center as well. Of course, in Hong Kong. So we're seeing all these major centers, huge. We're seeing refiners in Switzerland. There are six refiners, or
There's
four refiners,
four major
major
ones.
refiners
Yeah.
in Switzerland, all going full tilt, all making basically kilobars. Why kilobars? Because that's exactly what our friends from the Chinese want. They
Yeah.
deal in kilobars.
It's unprecedented, as we've heard. There was a great interview recently with a guy who's been there 40 years and said, we in 40 years have never seen anything like this, where it's nonstop 24/7 demand to cast Western bars and turn them into Eastern ones. And you mentioned India. I just checked the ShareLinks site just before this interview. We're up to 25.5% premiums as between the overt, what's allowed to be bought, and then the smuggling is turning the Indians' crazy policy against them in a hurry. I mean, really, it only took a few months for the country to adjust to these insane tariffs. And, we may well see greater demand in India than we've ever seen next year.
Well, actually, India is now thinking about stopping the taxes, because now that they're smuggling, they're they're not getting the revenue.
And don't forget, there's a big election next year in India, and the person who is expected to win is someone who's very pro gold. So you could see some crazy things go on in India. I think that's in May, which is only a few months away.
Yeah, no question, he's very pro gold. India has been a gold loving country for years. They store their wealth on
Centuries,
their spouse.
centuries, millennia. If you ask Indian people, hate rupees, and yeah, so
they forget it. And well, what they're doing now is they're switching to silver. So on the official side, at least it's cheaper. So you're seeing massive imports of silver.
Yep,
I think they're importing 25% of the annual production of silver.
Yes, the record level was 5,100 tons in 2008, and they are going to break that record this year in silver. And speaking of silver, now we have about 6 minutes left. Here's my last question. Now, regarding COMEX silver inventories are also low. It's about 51 million ounces, which is about $1 billion worth. Of course, we could be down as low as 35 million ounces because of this December delivery period. But it's not as low as gold. But the big question is now, GLD inventories have been plunging with the gold going to China, but SLV's inventories have not. So how do you see the difference right now between the paper and the gold and the paper silver markets?
Okay, can I tell you honestly?
Yes.
I don't think that the silver is there in London. I don't think it's there. So, and therefore the bankers don't ask for it because it's not there. Gold is part there. Now I have a theory, which I've talked with Reg, Howe, and we believe that in gold, the gold got to the GLD through a swap, because they're not allowed to take a lease but they certainly were able to swap. So they swapped with the Bank of England. So the Bank of England gave them gold, and of course, cash went back to the Bank of England. And it was supposed to re-swap back, but of course, the Bank of England doesn't ask for it back. Now this GLD is being departed. Okay, it's going to China. Well, it really belongs to the Bank of England. Well, it really doesn't belong to the Bank of England. It belongs to
China.
other nations like Germany and others who want their gold who can't get it back.
Right.
So it's a real vicious circle. That, it's like thievery. Okay, it doesn't belong to it. But silver, I think the initial stash was 137 million ounces that came from
Warren Buffett.
and that was it. And there was nothing else. So that's why I don't think that silver is actually there, and that is why it doesn't depart, because it's just not there.
So to clarify, and that 130 million ounces or so, do you believe that, as I do, came from Warren Buffett? They kind of, strong-armed it from him?
Yeah. Oh, for sure. That came from that when he got in trouble with Salomon Brothers and everything, and he was forced to give up that silver, and that was the initial stash that they got, and that was it. And after that, that's why I notice every time I write it. So listen, every time gold goes down, GLD goes down in levels, and whether gold goes up or down in price, it doesn't matter. But SLV stays pretty constant. Actually went up a bit, Now it's pretty well constant.
And of
so
course,
I actually think it's paper. I don't think, and the bankers know. Only a banker can go in and cash it. So.
And of course, J.P. Morgan is as short silver on the COMEX as they are long gold. So clearly, there's a desperation here to prevent people from understanding. And, to me, I can't even imagine why they're keeping the price below the cost of production, because I think there's just going to be an absolute tsunami of demand in 2014.
Well, the German situation kind of floored me. And I saw only 37 tons of gold in 1 year coming from New York.
New York and Paris combined.
That is true.
That
is. You know what?
Yeah.
I'd be willing to bet that probably the 37 tons was all the Bank of France.
Uh-huh.
Nothing came from New York.
It may well be true.
And you know what? You're 100% right, because 374 tons is to come from the Bank of France. Mm-hmm. And the Bank of France is not going to release any gold or anything like that. Why are they, maybe they've done a crazy thing. I don't know, but it's, well, they don't have any terms or
yeah.
They can lease, or they can, they would just store there. It's like the Bank of Canada.
Well, given that
Canada stores a lot of gold, they want to ask for it back, they can.
Well, given that this whole mess started because Charles de Gaulle wanted gold, it would be quite remarkable that France has joined in this scheme, especially when it's a bit player. But I guess we'll never know. Look, we're down the last minute. I just want to say, Harvey, thank you for clarifying so much, not just for our listeners, but for me, because I'm always trying to figure out this stuff, and I look forward to to going over more of this with you in the future. If you can just go over for the listeners, you can talk about your website, how people can get in touch with you, that would be great.
Okay, it's at www.harveyorgan.blogspot.com. I write every day. That the New York markets are open. Okay, so if they're open, I write, and I generally write about the COMEX. That's the main part. So I try to look at the inventory levels, the movements, and try to make heads or tails of what these guys are doing. I will concentrate specifically on the GLD declining in inventory and the COMEX declining in inventory, because I believe that is your major issues. And that's what I concentrate. And then I give some stories which should influence the price of gold.
Yeah, and everybody at this point in time, given what we talked about on this audio blog, everyone needs to go there every day and check this stuff out, because something is going to give in the paper world soon, whether it's in London or the COMEX. Again, Harvey, thank you so much for coming on Christmas Day, and I look forward to talking to you shortly.
No problem. Thanks ever so much.
Great.
Bye.